Well, my name's Fiona Guthrie. I'm the CEO of Financial Counselling Australia. FCA is the peak body for financial counsellors in Australia. Most people have not heard of a financial counsellor, and we're often confused with financial planners. Financial planners are at the end of the spectrum for people who've got a lot of money, and financial counsellors are at the end of the spectrum for people who are in financial difficulty. So what a financial counsellor will do is help someone get back on track when they're having trouble paying their bills. One of the important things I wanted to explain is that financial hardship, financial stress, financial difficulty can happen to just about anyone. So one of the things that we know is the most common cause of financial difficulty is unemployment or reduced hours. The next most common cause would be ill health or relationship breakdown, and then for some people it's excessive use of credit. We get terribly frustrated when people think that financial counselling is all about budgeting, because it's actually a lot more complex. If you've lost your job, or your partner's walked out, or you've got cancer, or something's happened to you externally, then being better at managing your money or budgeting is only going to be part of the solution. There's lots of other things that we'll need to talk through with you. I think humans are by nature a fairly optimistic bunch of people, so we often don't think about what would be, to some extent, we talk about them as being unexpected events, but we in a sense should expect them. So the unexpected event of having a higher than usual expense because your car breaks down, or because you do lose your job, or you get sick. So we like to think that nothing's going to go wrong in our lives, but in fact lots of things can. So if we start thinking about those things, a really sensible thing to do, probably the most sensible thing, is to have a savings buffer. So people talk about paying yourself first, and that means putting aside a small amount of money, probably about 10% from every pay, and putting that somewhere where you can't access it, and having that as a default. So don't spend first and then save later, so you save first and spend later. The next most sensible thing you will do, and as you accumulate assets and have liabilities, is you'll think about insurance. So you'd want to have, you'd think about income protection insurance, possibly life insurance if you had dependents. But having said that, one of the things that you will see within the financial planning industry is people giving really quite bad advice about insurance because they earn lots of commissions on insurance products, and you'll sometimes get advice to go and buy lots of different insurance that you don't need as a young person. So it's about insurance that's fit for the purpose at the time you need it, rather than when a financial planner or an insurance broker suggests that you need it. What happens is that it's such a stressful time. If you can't pay your bills, what we know is that people won't be sleeping. It'll be affecting their physical and mental health. It's often affecting your relationship. It's affecting the way you're dealing with your children. So what we tend to do, most of us, when something is really stressful, is we ignore it. Sometimes we hope it might go away. Logically, we know it's not, but I know what I do when something's difficult, and all of us do this. We tend to put it aside and I'll deal with it tomorrow, but of course tomorrow never comes. So we often see people who have left it really late to come and seek assistance, to get advice. But if you do come to see a financial counsellor, what that person will do is sit down with you and try and understand your financial situation. One of the first things they'll do is they'll try and look at whether all your debts are actually validly owed, because there are sometimes, particularly with credit cards, people are given credit that they can't afford, and if that's the case, the bank should not have given that credit. It may be that person doesn't have to pay back all of the interest and charges. So are all the debts validly owed? And then they'll look at the person's circumstances, their health and their employment status, to get an idea of what options might be available for them. And they will include negotiating hardship arrangements with banks, talking to utility companies about different repayment arrangements. It might even involve talking about bankruptcy. There are so many different things that one would have to think about because everybody's situation is difficult, is different. It might involve early access to superannuation, for example. And then the financial counsellor might also go and speak to the bank or the utility or the telco on behalf of their client to help them with that negotiation, because sometimes that can be quite stressful as well. But that depends really on how the client is. There are also some people, and I think this is important for everyone to understand, there are some people in our community, it doesn't matter what you do, they can't pay their debts. They just don't have enough money. They may have in the past, or they may never have had because they've never been able to really accumulate anything. So they're people with really, really low income. They've got no assets, and those things are not going to change. They might have been victims of sexual abuse when they were young. They may have had drug addictions. They may be intellectually disabled. For whatever reason, they can't pay back their debts. And for those people, the only option really that should be available from creditors is to waive those debts. So financial counsellors will also advocate on behalf of those clients. And I'm really pleased to say that lots of the banks and the debt collection industry in particular now understand that it does not make commercial sense to try and collect those debts, because you're not going to get money out of people who can't pay, or if they could only pay if they didn't buy food or didn't pay for electricity, so they can't pay. And it's also the wrong thing to do, to be ringing people up 3 or 4 times a day asking for payment when it's impossible. So the right thing to do is to waive those debts, and lots of creditors are now doing that. So there has been a big change in industry practice in Australia in the last 5 or 6 years, and to the extent that the Australian Bankers Association guideline on financial hardship even mentions the fact that debt waiver is an appropriate solution for some customers in some circumstances. So part of the work, to round out the picture, part of the work we do in Financial Counselling Australia, apart from helping financial counsellors do a good job, is we're talking to industry about how they can change their hardship practices so that they deal more appropriately with people in financial hardship. And we know when they do that, if they deal with people in a respectful way, if they work with them to try and help them find a way through, they actually end up with better commercial outcomes than a kind of an aggressive understanding. And it's about recognising that 98% of people in Australia who are in financial hardship want to pay their debts. There is no doubt there is a small group of people who are trying to warp the system, but don't set the system up for that 2%, set it up for the 98% who are just trying to find a way to work through what is a terrible time in their lives, and they just need a bit of assistance to get back on track. And once they're back on track, they will be some of the best customers for those financial institutions they've had, because you have walked with them down that path. Well, debt consolidation, I think, is obviously an option for some people, but it's an option that needs to be weighed up really carefully, because what you'll end up doing is paying a lot more back over a long time, because that's always how debt consolidation works. It reduces your repayments, but the way that's done is to extend the term of the loan, almost always. One of the things we know from research is that when people get into financial hardship, they will at some point start to try and look around for ways to get out of it. So there's a lot of advertisements on television for what people think are debt consolidation solutions, but are in fact a Part 9 agreement under the Bankruptcy Act. That's a very serious step, because entering a Part 9 agreement is an act of bankruptcy, stays in your credit record for 5 years, and it's not really a debt. Well, it's marketed by by these people as debt consolidation, and it's useful if you have an asset that you want to protect, but for people who've got unsecured debts and lots of them, bankruptcy may often be a better option because the impact on your credit record is very similar. So in summary, debt consolidation, yep, it's an option. Secondly, it's often confused with Part 9 debt agreements, which are very, very serious things to enter into. And thirdly, with either of those, either a debt consolidation loan or a Part 9 debt agreement, consumers have to weigh up those options and think about whether they're the best ones. It might be better, for example, to choose bankruptcy. It might be better to access superannuation early. It might be better to negotiate hardship arrangements. There might be something that is a lot cheaper than any of those options. But I didn't talk about the fact that debt consolidation is always going to involve fees. It will be costly as well, up front. People make a lot of money out of financial... There's a lot of people, there are a lot of companies and organisations making money out of people being in financial hardship, huge amounts of money. So the common business model is really high upfront fees, so $1,000 to $2,000, and then an ongoing fee. Now that business model applies to credit repair agencies, for people who make the promise that they can fix someone's credit report up when often they can't, or they can only fix part of it. It applies to people offering debt consolidation loans. It applies to people offering Part 9 debt agreements, and it applies to people offering budgeting services. So this is a relatively new part of the Australian economy. Give us all your money, we'll pay your bills. They don't always do a very good job, but the common element to all of the models: high upfront fees, high ongoing charges, do not always go through the consumer's options. They only present the one option, and it's the option that makes them the most money. Be very wary.